Good afternoon, and happy Monday. I am jumping up here today because I was looking at this data about the real estate market, the Charlotte regional real estate market, and I just found some interesting information that I thought that I would share with you guys. So I want to know your thoughts. I want to know, do you think that the real estate market is scary? Do you think the real estate market is scary? Share in the comments below. You can say, yes, it's scary. You can say, it's somewhat scary, or you can say, not at all. It's not scary at all. But please feel free to share in the comments below. But let's go ahead and dive in. So we are in June. Happy June. In June, based on the trends, shows that it is peak season for real estate. And so I wanted to just show you guys three signs that we are shifting into a balanced market. So we're going to actually see how does the market play out through June and through the summer, and what kind of different trends show from starting today. So today's topic, three signs that the market is shifting to a balanced market. All right, so let's look at some historical data. I found this quite interesting because I meet people often, and I hear a lot of times a buyer might say, well, I am going to wait for the prices to come down in order to begin my home search or to buy a new home. So I pulled up this data, and this is going all the way back to 2004. So we are seeing a line chart from 2004, January 2004, all the way up to 2024 of this year. And we are seeing the average sales price for each year. And so what this is showing what houses sold for on average in the Charlotte region. So starting all the way from 2004, January 2004, we are seeing, for the most part, so this is pretty much a sideways pattern, but we start seeing that pattern and trend of sales prices increasing, probably beginning around 2016. We're seeing the trend of home prices really increasing since 2016. So a lot of people like to talk about the market crash and how that was such a big, crazy time, and for people to capitalize on low home values. And so that was because there was a lot of foreclosures going on, a lot of short sales that we did see around that after the crash. But when you look at the data, you guys, look. So in 2008, January 2008, the average home sales price was $214,000. And so let's even go back the year before that. So 2007, the average sales price was $214,000. So within that year, they were around the same ballpark, $214,000. After the crash happened, we are not seeing a significantly low dip in sales price. So there's a dip in 2009. That's February 2009, where it's 187. That's not too far from 2014, 214,000. And then we're seeing in 2011 another small dip, and that goes down to 179,000. And still, 179,000 is not too far from 214,000. One of the things that I did do for this chart, just so that way you can see the full transparency of this graph and data. So this is based off of traditional home sales. This does not include foreclosures and short sales. So if we're just talking about traditional home sales, the market really did not change during the crash after 2008. And I might have to do another live going over, trends from the foreclosure and short sale of that time frame. But today, we're not going to jump on that because I have other points that I really want to get to, but I just wanted to start off with the sales trend because I love looking at price points and how the market shows how trends show that home prices increase year after year after year. Another cool trend that I wanted to show you guys. Let's see. Let me get to it really fast. So I did notice that June we saw home trends do something in particular. All right, so let's take a look. So here we are. This is the end of May. You see that how that skyrocketed from January of this year to May of this year. It started at 420,000 all the way a jump within 6 months to 510,000. That's almost $100,000 difference there. 420 to 510. Just within 6 months, we're seeing that market change. And so a few things happened during this time frame, which is probably why we're seeing that jump. One, since we've been in this market for some time, and when I say this market, I'm saying that since we have been in the market where the interest rates have not really significantly made a big drop, people are becoming normal. Homeowners, home buyers are becoming normalized to the thought of the current interest rates. That's one thing. So people are like, okay, you know what? I want to buy a home. Two, I do not want to miss out on the market before the home prices get too high and I can't afford a house. And three, I don't know if the rates will either go down in my favor or if they're going to go the complete opposite way and go way above what I can even afford to purchase right now. So these people are not wanting to gamble or risk on losing out on a home right now where it's still affordable, whether it's price point wise or interest rate wise combined. And so there was a slight drop in interest rates a few weeks ago, and so we did see the market pick up when that interest rate did a slight drop. So yeah, just within 6 months, almost $100,000 difference of the market sales price increasing. So if anyone's saying I'm waiting for the prices to drop, market trends are showing, even from 2014 to 2024, that the prices are increasing. So one of the things that I did want to show you guys, though, is that June is typically when we see the peak season. So of every year we see, June is where that peak price hits. And why does that happen? So we see the June peak price hit because that's when a lot of people are relocating or transitioning in that summer window before schools start. And so they might either have a home to sell, or they might be moving into the area during this summer time frame, and they are capitalizing on the real estate market. And so normally when you have more demand than supply, the price increase that drives the price up. Or if this is a good point. So this is for the Charlotte region. And I want to provide a disclosure that just because this is for the Charlotte region, this does not mean that this is the same exact scenario that will play for your house or for your home. And so for each house and home, it's in a completely different neighborhood, location, school area, price point, and all of those different demographics of the home can play a difference in how fast your sale can home and for how much your home can sell for. So we're just looking at the Charlotte region in all. So we do see that peak season happening in June. Another trend that I did notice for guys who are saying I want to wait until the market prices drop. So after June, we see a slight decrease in the market home sales price from June till January, and then we start that upward trend again. So from June to January going down, we see a slight decrease, and then we see the upward tick from January to June. So if you're trying to play the market, quote unquote, then um, that after summer season and to January is when prices tend to reduce. The only thing that I do want to say with this being an election year, I don't know what the rates will hold once we move towards the fall or once we move towards the election. But if you're going to try to play the market and wait for rates to drop, what will more than likely happen, because everyone else is probably doing the same thing and waiting for the rates to drop, what will more than likely happen is that once those rates do drop, tons of buyers are going to flock to the market, flock after the house that you want that's been already sitting on the market for about 40 days. And they're going to want that same home. There's going to be multiple offers. They're going to push the price up. And then it's going to weed people out of the market. So the only thing that I want to say is if you do want to buy a home, then go ahead and get everything in order now, your pre-approval, your funds, your down payment and closing costs. So that way when the right home comes on the market now, then you can make that move. And one of the things that I want you to keep in mind if you are thinking about buying a home right now is that home owners, they have also become somewhat normalized to the market. Yes, they still want their home to sell and they want their home to sell fast, but they are also, I've been seeing a lot of either price reductions or negotiations where the seller is willing to offer a concession. And so if the interest rate, quote unquote, is a little too high and the seller's offering a concession, you can use that interest rate, you can use that concession, which is money that the seller is giving you towards your closing costs. You can use that to help buy down your rate and to make that home more affordable for you to purchase. So if you want more details on how to work that strategy, please DM me and I would be more than happy to walk you through that scenario. All right, so that was a really cool trend that I wanted to show you, how the prices continue to increase and then how we see an uptick in the peak season when June hits. And so this is normally the time when people, homeowners who are selling their homes, are capitalizing on the market and selling their house for the most money now. All right. So let's see what else I have that I wanted to show you guys. Okay, so let's move to days on the market. And I'm going to change my graph to the maximum time possible that we can look back over this historical data, because I thought this was pretty interesting. So right now, anyone who is experiencing this current market, they had a false sense of reality when the pandemic hit. When the pandemic hit, everything was moving fast, everything was selling for well above asking, and yeah, a lot of fast moving action was going on during the pandemic time frame. And so anyone who was experiencing that, it was a slight false sense of reality because that is not a normal market. So as we look over these trends, and we are looking at the days on market. So that is how long a house has been on the market from the time that it was listed until it went under contract. All right, so right now, the average days on market is for the month of May is 37 days on market. So on average, it takes a home to receive a contract in 37 days. So that means it's listed on the market, showcased on the market in day number 1, and it takes about 37 days for the seller and the buyer to come to an agreement, or the seller to accept an offer and go under contract with their home. That doesn't mean that they're not receiving offers during that 37-day window. The seller possibly could be receiving offers, but maybe in the initial phases they did not accept that offer for whatever reason, and they decided to wait out the market. And so on average, we're seeing 37 days. So during the pandemic, let's go to about so right before the pandemic hit, which was January 2020, the average days on market was 54 days. So this is pre-pandemic, before we even got that alert and letting us know that everything was going to be shut down. January, the average days on market was 54 days. So it took about 54 days for a house to go under contract. All right, so we're going to look at January 2021. So it was about 36 days. And then 2022, it was about 28 days. And so January is kind of an oddball month because not many people are buying and selling homes. But I just like to look at the start of the year. But if we were going to take June, all right, so June, this was when the pandemic kind of just kicked off. So June of 2020, we're seeing 45 days on market, which is a little bit longer than where we are now. But that's when things were just a little crazy. We weren't even able to go out and show houses, and we had to develop protocols in order to go out and show houses. So that was June 2020, 45 days. Let's look at June 2021. It went down to 21 days. And then June of 2022, it went down to 17 days. And so this is what people had a false sense of reality. They believe that when they put their home on the market, they would get tons of interest, tons of showing, tons of offers, and their house would sell within the first week of going on the market. And that still does happen for some houses in some locations and some price points. So every house is unique, and it would take a specialized agent to look at your home and your area, your neighborhood, and to determine how the market responds to your home. So 17 days compared to 37 days. So that's almost double the time of what houses took to sell during that pandemic time frame when interest rates were at a rare low. A rare low. I'm saying that because that is a rare low that people got to take advantage of, and we might not see that rare low anytime soon. All right, so moving on to the next. All right, so I wanted to also show you guys that looking at this trend here, the days on market that we are seeing for May, 37 days, is still at a low, because looking at the trend before the pandemic, we're seeing 60 days and then above 60 days. So everything pre-pandemic was 60 days or more. There's a slight 40 days there. So on average, it was 40 days or more for a house to sell pre-pandemic. So we are actually seeing possibly a pretty normal market. And so that's why I wanted to jump up here and let you guys know the 3 signs that we are seeing for this current market is shifting towards a balanced market. All right, let me pull up my other information. So we're going to change our graph and go to a bar graph. And so we're just going to look at the last 3 years just for, that's the max that I can do for showing this in a bar graph form. But sometimes it's easier to see in a bar graph form. All right, so the number one sign that we are moving towards a balanced market, and a balanced market is where inventory is on the market for between about 6 months. So about 4 to 6 months, we're seeing that houses the month supply of inventory is about 6 months. All right, and so the number one sign is that the houses are staying on the market longer. So the number one sign that we're shifting towards a balanced market is that the houses are staying on the market longer. So as we saw in May of 2022, 17 days on the market that it took for a house to go on the market and to get a contract. And then in 2023, it was 36 days. And in 2024, this is for the May time period, 37 days on market. So the houses are staying on the market a little bit longer, which means that we're shifting towards a balanced market. Number two, this one is the real indicator of if we're in a balanced market or not. So a balanced market, as I was saying, is more about 6 months supply of houses being on the market. So that means that it would take about 6 months to sell all of the houses on the market if no new houses came on the market. And so we're seeing in 2022, there was about 1.5 months supply of inventory. And then 2023, there was 2 months supply of inventory. So it took about 60 days for all of the houses. It would take about 60 days for all of the houses to sell if no new inventory came on the market. And so now in 2024, we're a little over 2.5 months. So we are looking at about 40 to 50 days with inventory being on the market if no new houses came on the market and we had to sell everything. It would take about 40 to 50 days. So that's sign number one. Or sign number two. So first one was the houses are staying on the market longer, and second one, month supply of inventory. What those first two show is that houses are still coming on the market. So that's a great thing. So we actually, for anyone who is looking to buy a house, you actually have now more house options to choose from when you're looking to buy your home because there's more inventory on the market. And since houses are not flying off the market so fast, that means that it gives you a little bit more time to make a decision and, review your finances and to make a solid offer without having to go into a bidding war and go over asking price. Some locations, houses, neighborhoods, price points, we do still see that. But for the most part, you have a little bit more time to talk through if that's the right house for you and if you're going to put in that offer and submitting a strong offer. All right, and so the third sign that shows that we are moving towards a balanced market is a decrease in the number of sales. All right, so the decrease in number of sales. So this is showing homes for sale. So I want to first show you the homes for sale. So in May of last year, there was about 7,000 homes for sale. And then 2023 of May, there were more homes for sale. And now in 2024 of May, there's even more homes for sale. So this is letting you know that we have more houses to choose from this year than the previous years because there's more houses that's on the market and they're staying on the market a little bit longer because we're moving towards a balanced market. All right, and so let's look at the closed sales. So we looked at homes for sale. So it increased year after year. And then the closed sale is actually decreasing year after year. So in May of 2023, there was about 5,000 homes that sold that month. And then the next year, it decreased. Fewer homes sold in May of 2023. I may have said that wrong. And so the first one, May 22, 5,000. And then May 2023, under 5,000. And then now here in May 2024, about 3,000 homes sold. So you see that there's a decrease in the numbers of homes that have sold during that May time period. So those are the three signs that shows us that we are shifting towards a balanced market. So number one, houses are staying on the market longer. Number two, the month supply of inventory, how many months it would take to sell all of the homes off of the market, is increasing closer to that 6 month time period. And then number three, there's a decrease in the number of sales year after year. So, what do you think now? Do you still think that the market is scary? Do you think that, it's somewhat scary, or it's not at all scary? And the reason why I asked that question is because if something is scary, it's because normally it's a lack of information. And so, with the right resources and with the right information, it can help you to gain knowledge, wisdom, and understanding for your current situation and the current market. And what does that look like with the dreams and the goals that you have for any kind of real estate need that you want to achieve? So, feel free to DM me if you have any questions. I just want to give a quick run through of this information, um, especially the trends that I noticed, especially going back to the pandemic time frame, or sorry, the crash time frame. But yes, DM me and let me know what questions you have. I would be more than honored to help answer anything and bring clarity to your home ownership and real estate goals and needs. But all right. Well, you all continue to have a wonderful day. And since we are now in June, I'm going to actually be working on a market report for May, which is going to showcase the market real estate update, and it will compare it from April, from April to May, the trend that we saw for that month's time frame. So make sure you stay on the lookout with that information. And if you do want to receive that via email, send me a DM with your email, and I will be sure to get that information to you via email so that way you can have it and review it and dissect it at your leisure. But you continue to have a wonderful week and continue to